getting things going here. Hello, everybody. My name is Daniel. I am with VantagePoint AI. We're just getting our YouTube Live fired up for today. Today is May 6th. It is 4 o'clock, 4:01 now, p.m. Eastern Time. Hopefully everybody has had a good day in the markets. I'm just getting things going. Want to make sure from a technology standpoint, everything is working on my side of things and you can hear me and you can see me okay. Looks like we had a couple of people in the room already ready to go, so welcome. Put a little chat in here. All right, got a good connection. It appears my microphone is working fine. If you are in the room and you can hear me okay, you're in our live and everything is coming through to your screens and your speakers fine, give me a little feedback. Say hello in the chat. I'm going to keep my eye on the chat to make sure that if there are any questions, I can answer them on the fly. And if everything's looking good on your side. Hey, James, my microphone volume is turned all the way up. You may want to turn up your speaker volume, my friend. Hopefully you should be able to hear me okay. I don't want to go too high with the microphone volume because then it gets all staticky, but you should be able to hear me okay. Burrow, glad you're there. It looks like it's working fine for you. That's fantastic. That's fantastic. Well, if you're in our live again, welcome. Thank you for being here. Thank you for being interested in what we have here at VantagePoint, and obviously interested in looking at the analysis for the tech stocks. So it looks like everything is working fine. I'm going to share my screen here. First of all, in case you don't know, my name is Daniel. I'm with VantagePoint, and VantagePoint utilizes artificial intelligence in the financial markets to do a very advanced form of technical analysis, and I'm going to dig through that technical analysis for you today. Got about 25 years experience in the financial markets and almost 15 years of that utilizing this powerful artificial intelligence software. So, hey, Mark, looks like it's working for you. For Jeff, okay, it looks like we are cooking and we are ready to go. So, let's start out here. I'm going to start talking about the SPY. First of all, from an overall market standpoint, there's been a lot of questions around what's going on in the markets. There's been conversations of tariffs. There's been conversations of earnings. I mean, earnings seem like they're everywhere right now. And that's one of the things we're going to talk about today. There's been conversations about so many things that impact what you are trying to trade. And that's what I love about VantagePoint. All of that influences price. And what we're doing here at VantagePoint is using artificial intelligence to analyze all of those minute hidden patterns and relationships within price to generate the predictions. So in today's session, we are just going to walk through in detail what I'm seeing from, in this case, the SPY, what I'm seeing from the NASDAQ, as well as some of the other stocks that I put in the comments there. Palantir, Google, Meta, Apple, Microsoft, Broadcom. We'll even take a look at Netflix today. We should have enough time to get through all of those. And I'm going to do as deep of a dive as I can based on what I'm seeing with the tools that I utilize on a regular basis. So, hey, Miss Philly, glad you're here. Barbara, hello, hello. Nice to see you in this session. As I said, I'm keeping my eye on the chat. So if for some reason a question pops up and you want to jump into the chat, by all means, please do. And I'll answer the question, or my team will answer the question. And if I don't get around to answering the question, you can always go to VantagePointForecast.com and just take a look. We'll put a link that you can click on right in the chat in case you have some individual questions you want to dig into. Hey, Ramel, glad you're here. All right, so let's dig in on the SPY. First of all, let me zoom in a little bit so that you can see the side of the chart really, really well. This is the last forecast that we've had on the SPY. This is the one that is the current forecast that we've been utilizing to understand what's expected to happen, right? And when you look at this, you can see a couple of things on the screen. And I don't know if we have people in here that have never seen VantagePoint before. I assume we do. If you're somebody that has never seen the advanced technical analysis and the forecasting capability in VantagePoint, just hop into the chat and let me know that that's the case. I'm planning on taking this conversation today, this live session, through a good step-by-step process with the basic indicators. Then I'll layer on some optional and additional indicators that I like to take a look at to provide a little bit more conclusive look at what's expected to happen in the market. So if you've never seen any of this stuff before, just say first time in the chat. And then this way I know that, we've got some people that haven't seen it for you. Hey, Pablo. All right, so the first thing that I want to point out is how do we know what the artificial intelligence is saying about what the SPY is expected to do? Now, everybody knows the SPY is the S&P 500. And the first thing that I'm always looking for is what point in the chart did we see a crossover happen where the blue line was below the gray line and it went to above it. Right here on the left-hand side of the screen, you can see the shaded area was red. And then when that crossover happened, it turned green. That's one of the first things, as a matter of fact, I like to say that is the first indicator I always take a look at. I like to consider that my primary care physician, right? That's the first person I'm going to talk to about something that I might have a problem with. And then I'm going to see if a specialist agrees with that problem, and that's where I like to take a look at the neural index. This neural index, when it's green like this, is indicating strength in price. And what I mean by strength in price is that price is expected to be higher over the next couple of days than the previous few days. The artificial intelligence is doing that analysis. And by the way, this indicator alone has been tested to be up to 87.4% accurate when it says price is expected to be higher or lower. So by using that as a specialist, if you will, if I use that doctor analogy, my primary care physician saying trend is expected to be up, specialist is saying there is strength expected in price, and then I can go check some of the momentum indicators that we use in the VantagePoint software, and these are here at the bottom. Pardon me. And what I'm looking for is a positive slope to these lines. I want to see these lines creating higher lows or moving higher to say that momentum is expected to build bullishly or bearishly over the next few days. A little trick that I like to use when I look at momentum indicators, first of all, is to make sure I've got enough days in my analysis, and I like to take a look at 5 days or so. So I look back at 5 days and say, all right, if I've got prices or if I've got my momentum ending higher than I did 5 days ago, then I know I've got some bullish momentum. And you can see by looking at this in almost all the cases we did. So if I zoom back into this chart and we take a look at from that crossover, all I need to do is then just keep checking in with my primary care physician. I need to keep checking in with that blue line to see if that blue line is still above and that shaded area is green. I'm not sure how I got all those circles in there so nicely. I'll probably never be able to do that again. But all I'm looking for is that every day that I download my data at 6:30 p.m. Eastern Time, I just want to make sure that the artificial intelligence is still in agreement with bullishness. How would I know that it's not in agreement with bullishness? The AI sentiment is saying that there's bearishness expected. Well, it's easy. I would have a crossover that reverses that forecast at some point in this chart. So for the last, what is this? 1, 2, 3, 4. That's not really a 3. Here we go. 4, 5, 6, 7, 8, and today is 9. This was our prediction that came out at 6:30 last night. 9 days. The artificial intelligence is saying, hey, you can expect the trend to continue higher. It doesn't mean every day is going to be an up day. It doesn't mean the market is going to rally. It means that the price trend is expected to continue bullishly. All right, so every day we had that at 6:30 last night, I got this information. So I'm just going to, for those of you that are new and have never seen this before, I'm just going to analyze right here on the right-hand side of the chart to tell you what was expected from the AI going into today, tomorrow. And what we're seeing here is that price trend has weakened a little bit, still bullish, right? We can see that that line, that slope of that line is still pointed up slightly. So there's still some bullish trend left. And we can also see the shaded area is green. So my primary care physician is saying, you know what, just keep an eye on things, but so far so good. I look down at the neural index, and in case you don't know, this is called the predicted neural index. See, we're using deep machine learning. We're using artificial intelligence to do market analysis, and we're looking at global market relationships to figure out these predictive indicators. This is a dual patented software. So one of the patents is on the process we use to find those hidden patterns of relationships. The other one is on the predictive indicators that are generated from that patent. So we're using two forms of artificial intelligence, deep machine learning and generative AI, by creating future price based off of that deep machine learning. This technology has been available since 1991. In case you don't know, it's not a new technology. We've been utilizing it. It's been available for people and traders like you for, heck, what is that now? 34 years? A long time, okay? So what I see here is a little bit more bullishness in trend, more bullishness in price. And then when we look at the momentum indicators, I want to show you something. This is the highest momentum reading we have had in a very, very long time. This line from the beginning of the trend until now, the blue line, this is a 3-day momentum predictor, is still indicating that there is bullish momentum building. That doesn't mean that the price is going to skyrocket. It just means that it still has upward momentum that could support prices moving higher. I look at the pink line from the beginning of that data now, and I get the same conclusion that there's still support there for prices moving higher. The pink line is a 2-day momentum prediction. The dark blue line is a 3-day prediction. And the short one is a 1-day prediction, right? This is all end of day data, Ramel. This is all end of day data. I zoomed into a very short time period so you can see the latest forecast until last night's data, so you know exactly what I'm looking at. But it all comes out at 6:30 p.m. Eastern time. Now, what I wanted to point out about this line here, the light blue line, the 1-day prediction, all right? This is a 1-day prediction of momentum, and it's right here. I'm going to trace it with my yellow marker so that you guys can see it. And what I see here is that there is a little pullback from the 1-day momentum. All right, somebody's telling me the volume's a little bit low. I'll adjust my gain a little bit more. I don't want to go too much so it doesn't get staticky. You may want to just turn up the volume on your speakers, Kirster. But I turned up my gain a little bit on my microphone. Hopefully that helps a little bit. But just check your volume. All right. So what I see here, where'd my pen go? Oh, lost my pen. Sorry about that. As you can tell, this is a live. So let me go get my pen back so that I can keep drawing on the screen. But what I'm seeing here is that from this point to this point, I'm actually getting lower highs. So let's understand what that means. This is saying that momentum over the next 2 and 3 days is still bullish but weakening, and the 1-day momentum is expected to be bearish. Well, that could give me some really good information around what I could expect in the SPY today. So let me summarize so far what we have. We're expecting still some bullish price trend. We're still expecting some strength in price, but momentum is weakening to the point that there's even a little bit of bearish momentum on the 1-day momentum forecast, which means I have to look at the SPY as a cautious position. I have to think about loss mitigation, right? I've got to think about finding a good stop loss or tightening up stop losses, maybe after looking back at a 72-hour low, to find a good stop loss point to protect my downside. Or if this is a position I'm up in, I can use a low here to set a stop loss. It really depends on your trading style. But if I'm structuring my position going into the market today, I'm looking at the fact that there is still some bullishness, although weakening bullishness. And let's go a step further. Out here, last night at 6:30 p.m., I got this little red-ended bar. This is the predicted high and predicted low for the next trade day, right? And I'm not too concerned with how big the range is unless I'm doing some day trading. What I'm really concerned with is whether or not the high is expected to be higher or lower than the previous days. The fact that it has this little red end on it tells me the high is expected to be lower than yesterday. And then I want to look at the low and do the same analysis. I want to know if the low is expected to be lower than the previous day. And this little red end on the bar is telling me the same thing, and it's saying that there is some bearishness expected from a low point. So if I'm expecting a lower high and a lower low and momentum is waning, well, then I've got to really think about from a trade setup standpoint whether or not I'm good at getting out of that position after these gains. If I had used that information, set a stop loss off of that 72-hour low, that forecast would have generated about 2.15% in hypothetical gains here. 500 shares, $5,866. Now, this is purely education. I'm not providing anybody any trading advice, and I want you to know that that's the case, because one of the struggles that traders have is exit timing. Now, VantagePoint is still forecasting that there still could be some bullishness left in this, but when I'm seeing this bearishness work itself in, I've got to think about mitigating any potential losses, or at least tightening up some stops, right? That's one of the keys to using this information. Or if I've moved my entry, if I've moved my stop loss up to my entry point, and I'm just thinking, look, break even is not a bad situation, break even is not a loss, well, then I can set a stop loss at wherever I got it. Maybe it's 547.76 to allow a little bit of that bearishness. Why? because VantagePoint is indicating there's still some bullishness left in the trend and in the strength, which means if I'm okay executing at a break-even level, that's up to you, not me, I can do that as well. A lot of traders that I know love to set targets. Personally, I think targets are a good idea from an educational standpoint. I like to teach those because what that means is you know what you're trying to get every time you get into a position and you know how much you're willing to lose. If you're interested in using ATR, you're interested in trying to figure out when I get an entry, how much am I willing to lose and what is my target going to be? If I'm willing to lose 1R but pick up 2R from a target standpoint, well, then that means I can ride this trend until I lose 1R with the expectation of picking up 2 units. So this would be risk 1 to make 2. Okay, that's a good, in my opinion, that's a good way to look at this. Now, some of you may say, you know what? I want more small wins more often, so I'm willing to risk 2 to make 1, right? That may be your trade setup, but that's going to be dependent on your trade plan. And that's going to be dependent on what you're doing and how you're doing it from a trading standpoint, not just a technical analysis standpoint, okay? Not quite total divergence, Damien. We're just getting 2 indicators saying that there could be some bearishness. So 2 out of 7 isn't a total divergence. It's more of just a cautionary approach to what's going on from a SPY standpoint. And for those of you that had the opportunity to go look at the SPY and see what it's doing, then you know that it was an update today, right? From an overall, where it opened to where it closed, lower than yesterday. We got a lower high today and a lower low, just as VantagePoint indicated. There was still some bullishness in price, but there wasn't enough momentum to get price above where it closed yesterday. This analysis, folks, is valuable analysis to understand what is expected to happen. A little bit of weakening in a bullish trend can happen. One of the things I like to do is throw the triple cross on here and see if prices are still above this fat line. For those of you that have the software, this is a triple cross. I like to use the triple cross long as a dynamic support and resistance, meaning when price closes above this dark blue line, that tells me I have permission to continue being bullish about price. You can see how valuable that line is because price came right down to it and hit it and bounced off of it on that day. And right now, I still have permission from a bullish standpoint. Why? Because the artificial intelligence is using an 18-day predicted moving average that has 3 days of actual predictive data in it, is still saying prices are still okay from a bullish standpoint. I think the close, let's see, the close on the SPY, 558.80. So if I just take my cursor and I mark that out, and there's 558.83. That's where the close was. Again, a same situation where I could have been stopped out. I could have let it run depending on my trade plan. But what VantagePoint is saying is there still is some bullishness left in the trend. Now, there's a key thing I want everybody to look at. And that is support and resistance. For those of you that don't use support and resistance, I can't tell you how valuable it is. In my opinion, it's a very valuable piece of information. And what support and resistance tells me is where are there old price points, like here, that could cause price to pause in the future, like it did on Friday. Price went literally just above that number and then paused there. Let me zoom in to show you what I mean. Look at that. Let me circle it again. This is a level. Oh, too far. Where do we go? Here we go. This is a level that was marked back here on this day. 4-2. The high of that day was 567.42. After we got 2 days of candles, this dotted line appeared, and that dotted line said, if price comes back to this point, you can expect a pause, a retest, you can expect a little jumping around in price. Well, the one thing that I know, 2 things that I know about support and resistance is volume and momentum can push price past support and resistance levels. Now think about what I'm saying here. Volume and momentum can push price past those levels. Well, if we look at that, we can see that it could not push it past it. Why? It did not have the momentum. If I pop the volume on there, you're going to see a story that is a valuable story. Momentum was waning. It was forecasted to wane using the predicted artificial intelligence, and volume was waning. If both of those things are happening at the same time that you're coming up to a resistance point, the likelihood that it breaks it immediately is low. Now what usually happens is it pulls back and then it wants to retest that in the next couple of days. That's what I'm expecting from an overall market movement. Is we're expecting some more bullishness in the trend, and we're going to try to retest that higher price point. There is going to be a couple of days trying to get back up to that price point, but I can tell you one thing: overall, the artificial intelligence VantagePoint from an accuracy standpoint is indicating there still could be some bullishness left in that. And if we see some bullish volume return back to the SPY like we did today, there could be a push higher. All right. Why did I start in the SPY when we're talking about tech stocks? Well, I'll tell you. Understanding what the SPY and the NASDAQ are doing is very, very valuable. And I like to look at both of those. So here's the NASDAQ, here's the Qs. And I am going to put on verified support and resistance. And I am going to take a look overall on what the differences are in the forecast. And I can tell you, when I look on the right-hand side of the screen, there is one difference that jumps off the page. And that is the Neural Index turned red on the NASDAQ. The Qs turned red, indicating a little bit more of a pullback from an overall market standpoint, saying there is still some bullishness in this trend. We're expecting a lower high and a lower low, and we can see we got all of those conditions. We did see momentum peel off of this a little bit. So all in all, when I look at this chart, it's telling me a very similar story to the SPY. So when I think about the tech stocks, I've got to consider that. Two major indices. A lot of tech stocks are part of the NASDAQ. Two major indices are saying that there's some pullback. When I throw on volume, I can see the same kind of picture. Here's volume right here. When I throw on volume, you can see I'm getting volume waning. It even turned bearish from bullish volume. All of that are keys to making a determination around what's expected to happen. The AI is saying bullish, but bullishly, cautiously optimistic. How about that? One of the things I like to do as well, just a little bonus for you guys from an educational standpoint, the Q's $485 a share. I like to take a look at the TQQQ, which is an ETF. It's a derivative of the Q's, and it's only $58 a share, right? This is a leveraged Ultra Pro ETF produced by ProShares, and what it does is it tracks the movements of the Q's, but it makes it, from an investment standpoint, a easier investment. So some of you that have tight risk management rules, or some of you that have lower capital, this is a great alternative to trading the Qs. It's TQQQ. You can trade options on it. You can underlying asset. You can do whatever you want from that standpoint, but it gives you access to the movements of the Qs at a lower investment level per share. Trades just like a stock, trades just like an ETF, and your platform is likely to have it, although I can't guarantee that because I don't know every single platform out there. All right, let's take a look. Let's see what we got going on here. When you stop and you look at this, I got a question around what are those arrows from Damien? This is support and resistance, Damien. That's what I was talking about. VantagePoint has some add-on indicators, if you'd like, where you can add on support and resistance levels so that you know. I'm going to put on support so you can see the ones on the bottom. And it creates verified support zones to help me understand where price could pause and retest different levels. Here's a great example. Price broke into this zone, went up and tested this one, pulled back, and I'm expecting a retest of that next support level, even on TQQQ. All right, so now from a market overview standpoint, I'm only doing a couple of the major indices, but what it tells me is that there's still some bullishness potentially left in this trend. And when I'm thinking about the tech stocks, I've got to consider that some of that pullback is expected to happen. Now, one caveat, earnings. Let's talk about earnings before we start looking at some of these stocks. Earnings is a fundamental event that you've got to have a plan for, in my opinion. And when I say you got to have a plan for, I mean a trade plan. I wouldn't expect anybody to go into earnings season and just say, well, let's see what happens, right? You got to have a plan either to trade through earnings, get out before earnings, or wait to get back in after earnings, because some very unexpected things can happen on that earnings call. For instance, they could beat earnings, but have one part of their division that didn't do as well, or maybe they changed something about some future plans. And even though they beat earnings, the change of the future could cause trader sentiment to wane and a big drop happen. For instance, here's a great example. Here's Palantir Technologies, right? And with the line that I have on the screen, let me remove it for a second and show you something. Palantir just had earnings. I think it was today or yesterday after the market closed, if I'm not mistaken. They had earnings, and the stock dropped like a rock. Here's the question that I have for everybody. Did anybody here get burned by that drop in Palantir today because of that earnings readout? If you lost money or you had this unexpected move lower because you were feeling good about Palantir, just write into the chat that might have happened to you, or maybe it happened to me, maybe it didn't. This is an educational place, so all comments are safe. What we're trying to do is help traders understand a little bit more about how the market works and how to interpret not only the artificial intelligence, but overall price movements in the markets. And if you're looking at this and you're saying, yeah, it dropped like a rock and I got burned by it, let me point something out to you. This line right here, this is a doji candle. This is a candle that indicates indecision. Not a big deal if you ask me. Let me zoom in a little bit on it, because it's not a big deal if you ask me, unless that indecision comes at the point where there was an old price point that failed. All right? When I say an old price point that failed, what I'm saying is resistance. Right here on the left-hand side of the screen, you can see that there was a high with 2 candles to the left and 2 candles to the right that were both lower from a high standpoint. That tells me this is a price point that will cause future price to pause, to bounce, to skip, to do something, right? Well, in yesterday's market, we can see that price literally went right up to that resistance point, and I'll show you here. I'm going to put on verified support and resistance because I want everybody to see and understand cautionary tales around price. And one of those is when you have an old price point that has been, significant now for months. When you have a price point right here where it could impact future price, and yes, this line, this dotted line that I'm highlighting has been on it since this day, since right here. That's how long that dotted line has been there. When you have price run up to that dotted line and then literally fail off of it with a doji candle, I don't have to think much about it. As a matter of fact, when I saw price yesterday get up to Palantir and fail at that level, and then I looked at my momentum readings and I got the same momentum readings as I saw on the SPY and the NASDAQ, there was no question at about 3 o'clock yesterday afternoon what was expected to happen from a Palantir price standpoint. Well, then you layer on the earnings element, because you can see I have an earnings indicator, an earnings flag on my chart that tells me when earnings is expected to happen. You layer on that earnings element with a candle that failed off of resistance, with bearish momentum building itself in and increasing bearish volume, I get a little bit concerned, right? So if you did get hurt by the Palantir move lower and you didn't want to talk about it in the chat, I understand it stings, it can hurt sometimes, but there was very clear indication from the predictive indicators from volume and resistance that playing through earnings in this case was A, either not a good idea, or B, should have been utilizing an earnings play according to your trade plan, whatever that might be. So what is VantagePoint saying about Palantir right now? Well, I can tell you one thing. This earnings event is going to take 72 hours to clear out before price and the inner markets that drive price take back over. So if this is a trend you're out of, if this is something that you missed out on or you're thinking about getting back into, the way that I utilize that earnings information is to say, hey, stay away for a couple of days before, at least 3 days after, and then come back to it once that earning event has been absorbed in price. All right. Now, moving on to Google. Here's a great chart on Google. Here's a great example of what I mean. This was an earnings move, right? Earnings happened here. Google gapped up and then pulled back. Here's the 72-hour window that I talk about waiting. And then once all of that information gets absorbed by price, look what happens to price again. VantagePoint indicated, I'm going to zoom in on Google just so you can see it a little bit better, but VantagePoint indicated that we had clear bullishness, and 72 hours after that earnings information, that bullishness persisted. The blue line never crossed below, it stayed above. Our blue line is pointed up. We've got bullishness here. We've got bullishness here from the neural index. We've got some bullishness working itself back in from a 3-day momentum standpoint. My 1-day momentum has some bullishness working itself in. So what we're expecting from Google, based on what the artificial intelligence is saying so far, is that this bullish trend still has some staying power. Now I want to highlight something. If you look on the right-hand side of the chart, I've got an inside bar predicted, which means I've got some indecision from the artificial intelligence saying, hey, price, the high is expected to be lower, but the low could be higher. Whether or not that happens doesn't concern me. What concerns me is that I have an inside bar predicted telling me there's some consolidation expected to happen, and all of that momentum has not worked itself in yet. So when I go throw on my volume and I go throw on my support and resistance, I can draw some really powerful conclusions around what I'm seeing from an overall market standpoint. Take a look. Here's the old resistance point that happened after that big earnings pop. Price tried to get back up to it, failed off of it. Indecision prediction here from the artificial intelligence. Decreasing bullish volume. I need a little bit more oomph to get back up to that resistance level, which means I've got cautiously optimistic as well on Google. Still some bullishness expected, but what the artificial intelligence is indicating for me is that this trend still may have some bullishness in it, and we've got to be prepared for that if this is something that you're interested in. All right. Here's Meta. I love this forecast on Meta. Why do I love this forecast on Meta? It had a great crossover right here. The neural index agreed. The predictive differences had a lot of slope, positive slope to those lines. That's an increase in momentum on the 1, the 2, and the 3-day. And oh yeah, check this out. Here's a old resistance point that caused price to fail again. This is what you would call a structural bottom, meaning it hit this point, there was some rally and some movement, and then it came back and hit that point again, bounced off of that point with a major gap, telling me we have a hard bottom on Meta. And as soon as the artificial intelligence said, all right, we've got some bullishness expected. If I'm somebody that trades through earnings, that bullishness is there and expected. Here is the earnings date. Here is the 3 days. When I download my data tonight at 6:30 p.m. Eastern time on Meta, I'll be looking to see if we have more bullishness expected. And so far, the AI is saying, yeah, if you take a look at the triple cross or the 3-day forecast that goes out a little bit further, it's saying no matter what, and I know I'm flipping through the charts really quickly, but what I'm checking are the 3-day forecast, the trend forecast. This is a 3-day trend forecast. This is a triple crossover. And so far, all of those indications are giving me the same information that I can expect a little bit more bullishness in Meta. And that bullishness gives me some confidence in what's expected to happen. Now, I just got to take it a step further and cross-check my support and resistance, my volume, my volume. I'm getting so, oh, look at this. Look, wonder why price waned a little bit right there, right? You see these old resistance points I just drew over? There's 2 of them right here telling me that price is going to get into that and stall a little bit if I can't get more bullish momentum and more bullish volume, which I'm not getting yet. So we are in that, again, that scenario of cautiously optimistic, still bullishness. The AI is indicating more bullishness. The trend is saying there could be a little bit of a consolidation happening. And of course, we've got some announcements this week about rate cuts that we've got to be keeping an eye on and ear on, because that could affect some things. But all in all, the AI is currently saying that we have some bullishness on the horizon, just not a rally per se. All right. Here's Apple. When you take a look at Apple, let me just get a drink really quick. Thank you. When you take a look at Apple, this is a very, very powerful forecast. And the reason I say that is VantagePoint's 1-day forecast said Apple was expected to start dropping right there. You can see 5.2, saying that there was a potential drop in Apple. Now, does that mean that the bottom is going to fall out? No, it just means that we're expecting a little bit of a pullback. The 2-day prediction said we are expecting a little bit of pullback, and the 3-day prediction said we're expecting some consolidation. Why is that important? Well, if the 1-day forecast is saying pullback, and the 2-day forecast is saying pullback, and the 3-day forecast is saying consolidation, I'm expecting Apple to trade somewhere right within the bottom part of that predicted high and predicted low. Now, remember what I said earlier, and if you didn't catch it, you can always watch. If you haven't subscribed to the VantagePoint channel, you can always watch this on replay in the live section of our videos. Just make sure you hit that subscribe button so you can see all of that and get alerted when these sessions come up. But what am I expecting is a lower high, a lower low, a little bit of weakness in that trend. I've got some concerns about momentum. I'm expecting Apple today to trade right in there. It did. It traded exactly in where I'm saying it's expected to trade. But until this line crosses over, or my triple cross long, which is another predictive indicator says, hey, you know what? We've got a couple of days of price closing before it. There's still some consolidation going on. So for me, what VantagePoint is saying about Apple is wait and see. We still need another day of the 3 days after earnings to happen, which was today. Tomorrow at 6:30 p.m. Eastern time, I want to download the data on Apple and see what it says. But right now, Apple, in my opinion, is just a wait and see situation. I don't have to trade Apple. Heck, don't have to trade every single day. Sometimes the best days for trading are the days you don't, right? Because you didn't buy something you shouldn't have. But what VantagePoint is saying about Apple is that it's not as bullish as some of the other tech stocks we've already talked about, and there may be some bearishness coming into play that we have to be aware of. So make sure you use that when you're thinking through the markets. And by the way, the assessment that I'm doing from these indicators is a kind of assessment personally that I think everybody should do. I'm not advising anybody here, but from an educational standpoint, if you're not looking at non-redundant indicators that help you understand overall market movements like support and resistance, like volume, like momentum, then you're leaving a little bit on the table when it comes down to making an assessment. See, here's what I mean. This is a resistance point. This is a support point. That means this is the playground for Apple's price. Momentum, volume, price, strength are all saying that there is some weakness, so we can expect it to play in this area for some time, which means if you're looking for a quick pop, this may not be the area. But all in all, again, we've got a channel from 214 to call it 190. For those of you who like to do iron condors, again, there you go. You've got a great from support and resistance and a market that has some consolidation and bearishness in it. You've got a spot where iron condor or a delta neutral strategy. For those of you that don't know what that is, that's okay. It just means we're expecting Apple to play within this region for a couple of days before it moves out of it. And it's going to need some more volume and momentum to push past either this resistance or this support level. Stopping and thinking about that, now I go to my trade plan and say, do I have a trade plan that says when the market's expected to be sideways and there's uncertainty, what do I do? Sometimes, in my opinion, that trade plan is sit on your hands, don't touch your mouse, go play golf, right? Go for a bike ride, do something rather than force a trade on something like Apple, because the AI is telling me indecision is rampant on that stock, all right? Here's Microsoft. Now, Microsoft had a lights out forecast, and here's what I mean. If you have a plan that trades through earning, I'm zooming in on the last forecast for you guys. If you've got the software, you can go look at whatever you want to look at, but this is where VantagePoint indicated bullishness. This is where the neural index indicated bullishness, and this is where momentum had enough bullish momentum to say there's a new bullish trend coming. Now, if somebody had taken advantage of that and traded right up to that point, they could have with earnings. That's a nice move, 2.35% in 4 days. Think about that. 0.5% a day off of the artificial intelligence forecast if you grabbed it at the open and closed it out before that earnings information came out. If you just did that, we're talking about 0.5% a day in hypothetical gains. Not everybody's going to do that, but if you did, you can't be mad at that. Since that forecast, as a matter of fact, all the way to yesterday's close, the Microsoft move is up almost 13%. And then on top of that, if you add on anything that happened today, let's call it 12. I'm going to go right to the middle of today's prediction. 12% in 8 trading days. Over 8% a day, over a percent a day, over 1% a day in gains from that forecast. Assuming that you allow yourself to trade through earnings. If you don't, then tonight at 6:30 p.m. Eastern time, I would download the data from Microsoft and take a look right on the right-hand side of the screen like we've been looking at all day and say, where is the blue line? What color is the neural index? What does the slope of those momentum indicators look at? What is volume telling me, whether we're getting bullish volume, we're getting bullish decreasing volume? What does support and resistance tell me about Microsoft? And again, I can zoom out as far as I want. There is room to run before resistance comes into play. And you can see we've got a lot more bullish volume than we did back here during all this volatility. So no matter how I slice it, the AI is saying tonight at 6:30, take a look at this forecast, but we're clearly getting some bullishness from this latest forecast. And the Microsoft trend could continue higher. Once it builds in some more momentum and volume, it could really accelerate past that resistance level. And I don't care how you slice it, I don't care what you look at or how you use it. That is valuable information when you're considering, do I hold, do I tighten stops, do I cut my losses, or do I just let it run? Because at the end of the day, the hardest decision for a trader is, at what point do I exit? Face it, we're greedy, we want to make money, right? So we want that trend to go in our favor, which means I could set a tighter stop and try to protect my downside. This is the low of the last 72 hours. If I got stopped out there, the question is, would I walk away with a profit the low of the last 72 hours? Yeah, almost 10% from that forecast, which means as a trader, I have a decision I can make. And thanks to the artificial intelligence saying there's still some bullishness left in this Microsoft trend, I can make a more educated decision. And I think it's safe to say, I mean, just from my perspective, if I can make a more educated decision around what a stock could do with accuracy up to 87.4%, that stacks the odds in my favor. All right. Here's Broadcom. I'm just going to put the indicators we've already talked about. I think I've walked through all of them enough, but I just want everybody just to take a look. And by the way, hop into the chat right now if you're looking at this and seeing that this makes sense. Jimmy's asking about one-on-ones. If anybody ever wanted a one-on-one session with one of our people and you've got the software, you can always reach out to us. Our phone number is right there, 1-800-732-5407. Or you can go to VantagePointForecast.com and we can reach out to you. If you don't have the software and you'd like your own personalized forecast, go to VantagePointForecast.com, Jimmy, and for anybody else to take advantage of our expertise here, because we do offer that kind of stuff. All right, so zooming in on this, here's Broadcom, and what VantagePoint is saying about Broadcom is, ooh, we've got a resistance point up here. Take a look at this. We have 3 resistance points right here. There's 3 dotted lines rolling into this and one that's up here higher. Broadcom has entered this zone where it's going to need to test and retest this resistance. Once it tests and retests this resistance, it's either going to go one way or the other. How do I know which way it's going to go? I use my VantagePoint indicators. And right now, my VantagePoint indicators on Broadcom are saying cautiously optimistic, but still a bullish trend. As a matter of fact, the low today on Broadcom was the open, which means what it wants to do is stay above these resistance points. What it wants to do is move higher. What the AI is indicating it could do is move higher. There is still strength in price. There is still some bullish momentum going on. Well, with strength in price and bullish momentum, as soon as it can clear these resistance levels and get above them for a couple of days, we could see this thing accelerate up to that next level, generating some fantastic gains. So if you're a Broadcom lover, if you trade it, if you watch it, whatever the case is, I know a couple of people here in VantagePoint that are our VantagePoint family members, like James, loves Broadcom, and from an analysis standpoint, it's one of those things where the AI just provides some very valuable information I think everybody can use. So those are the stocks I was talking about. I put into the chat. I do have one bonus stock, Netflix, that I wanted to highlight because there's something going on with Netflix that I think everybody needs to know. And what we're looking at here on the chart is a 1-year high, a 5-year high, a 10-year high. This is a high point for Netflix. Now, a lot of people thought the tariff announcement around movies and cinema and things like that was going to cause this thing to bottom out. Sure, it caused a little bit of a pullback. We see that. But the artificial intelligence has been saying this trend still has some strength. We're expecting some consolidation. We're expecting a little bit of pullback from a momentum standpoint. Why is that the case? Guys, there's like a 10-year high. It might be an all-time high. I don't recall exactly because I didn't do the science on it or the homework, but I can tell you one thing. With a resistance level that is that high, that hasn't been hit in years, it's going to need some serious volume and momentum to push past that. Well, when I look at my volume, you can see I got an increase in bearish volume. This is the volume highs from last month, 421, 420. Those are volume highs. If those are volume highs, right, let's just stop and think about this for a second. If those are volume highs, and volume is not anywhere near there right now, but price is climbing, in order to break that 52-week, 5-year, 10-year high, I need more bullish volume and I need more bullish momentum. I'm going to go into my bag of tricks and I'm going to put on the Larry Williams percent R and the RSI because I love to use those as some momentum indicators. I use personally over 120 different readings. But what I'm trying to understand from this RSI is whether or not momentum has reached a high and come off of that high, and it has. When I'm looking at percent R, I want to know the same thing. Did percent R reach a high, and now is it coming off that high? And it has, which means from a Netflix standpoint, I got to think about setting tighter stops. If this is the forecast you use to ride this Netflix trend up, and geez, I hope you did, because from the time that VantagePoint forecasted that trend up to where it is today is a gain of over 22%, right? Let's say you had 5 options contracts of that. That's a $100,000 gain. Just say you had 1 options contract on that, right? That's a $20,000 hypothetical gain. Take your premium off that. Let's say you're up 10, 15,000 depending on the call you bought. But no matter how you slice it, what the artificial intelligence, because this is a predicted RSI, this is a predicted percent R, these are predicted momentum indicators, predicted strength indicators. This is saying, hey, this is a big winner, and taking away, if you take a profit like that, you're not going to take a loss, right? 22%. So this is a big winner, and you got to look at your trade plan and say, with this being a multi-year high and some of the predictive indicators waning and indicating bearishness, it could be an opportunity for some profit taking, but that's not up to me. That's up to you. All right. I've covered all the stocks I wanted to cover today. If you've got a ticker you want to throw in there, we can take a look at it. GLD, all right, let's take a look at GLD, Canoe. Let me just pull that up for you. Pulling up GLD, and we can see from a gold standpoint, the short-term forecast on VantagePoint had bullishness in gold today, right? This is the one-day forecast, Canoe. VantagePoint said, hey, there's a fresh crossover after this gap. The neural index is green. Momentum bounced off this bottom and pushed higher, saying we were expecting gold to be higher today. That is the one-day forecast for gold, my friends, so you can see exactly what the artificial intelligence was doing. Mojo says live. I'm not familiar with that one. Oh, Live Ventures. Okay, let's pop that in there. Ramel, we already did the SPX. We did the S&P 500. Now, when you look at this, we've got May 8th earnings on live, right? VantagePoint was indicating at last night at 6:30 there was bullishness expected. The neural index was green. The predictive difference is the momentum indicators were creating higher lows, except for one. So we had one saying bearish, 2 saying bullish. So let's count it up, right? Let me give you guys a great way to use multiple indicators, all right? I'll show you. The one-day forecast was a blue line above. Yes, that's a one mark. I'm going to write bullish. Whoops, bullish. I'm going to tally this thing for you. And I'm going to write bearish. I'm going to write bear, all right? We're going to tally it. So the one-day forecast in trend said bullish. The 2-day forecast, oh, I just erased all that. Oh, boy. Let's try that again. Bullish and bearish. Okay. The 1-day forecast had bullish. So there's a tally mark there. The 2-day forecast has bullish. There's a tally mark there. The 3-day forecast had bullish. There's a tally mark there. The predicted high, expecting higher highs, higher lows. Bullish, bullish. That's 5 tally marks for bullish. Neural index is green. Bullish. The short-term predictive difference, 5-day run, bullish. The medium term, the 2-day, bullish. The long term, the 3-day, lower highs, bearish. 1, 2, 3, 4, 5, 6, 7, 8, 9 predictive indicators analyzed. And if you had this information at 6:30 last night, 9 predictive indicators were saying bullish. 1 was saying bearish. We were expecting Live Ventures to be bullish today. I'm not sure. Let me see. Who was it that was asking about that? Sorry. Oh, Mojo. Yeah. Bullish today. What's it saying about what's expected to happen? Still more bullishness. There's a resistance point up here. Just be wary of what's happening on May 8th, and that is earnings. If you don't have earnings as part of your conversation, that's something that you've got to think about, right? That's something you have to think about. Michael says, let's see, PFE crush earnings 0.92 with a 0.26 more. That CEO raised the outlook. People need mediations each day and announce dividends. I'm not sure what you're saying, Michael, but I appreciate you being here, and I appreciate you getting involved in the chat, right? A lot of cryptocurrencies, absolutely. One of my favorite cryptocurrencies ETFs is a Bitcoin Investment Trust, and you can see VantagePoint had a very bullish forecast on crypto. We could go look at Bitcoin itself. So yes, it forecasts for over 45 cryptocurrencies and cryptocurrency pairs with all the same accuracy and forecasts. And the last forecast on Bitcoin that's going on right now has already produced over 11% in hypothetical gains. Everybody can see that on the screen there from a Bitcoin standpoint. So no matter how you slice it, the AI has the capabilities to give you an edge, an advantage. And I don't care if it's 3%, 4%, 5%, 10%. If you can have an edge over other traders, that puts you in the catbird seat. All right. I'm out of time, but I can tell you one thing. I have enjoyed today's session. I love the tech stocks. I love when you get involved in the comments and in the chat. I think it's safe to say that from an artificial intelligence standpoint, these forecasts have been absolutely incredible. If you have questions, you can give us a call. The phone number is in the chat, or you can go to VantagePointForecast.com. But for today, I'm going to sign off. If you're a VantagePoint family member, thank you for being a family member and a user of our software. If you're not, at least let me say thank you for letting me give you the view from my vantage point. I hope everybody has a fantastic day. See you later.